Okay, welcome everyone. Welcome to my stock market technical analysis channel. We're going to start out with the market indices. So we've obviously had quite a bit of selling recently, and I'm going to point out what I'm seeing in the charts as of today. Is that selling going to continue, or are we going to stop here and bounce, and the buy the dip crowd's going to come in? So we got to look at the charts to figure out what that's telling us as of right now. If you're new, give me a thumbs up. And then for anybody that's interested in taking the stock market technical analysis course, where I'll teach you a lot of these skills and really everything that I cover in this on this channel, click the link below. I know the link had been broken in the last few videos. I think I went in there and fixed that. So link in the description below to get to the course. And it's a $99 course. So again, it's not free, but for 99 bucks, I think you're going to get a really good deal and a lot of value out of that course. So, all right, let's get into the charts. Triple Qs. Now, we're starting out with a daily chart because really I'm looking at the larger time frames now. Given that we've broken the daily time frame pattern, we want to make sure, you always want to check that pattern and that time frame to make sure that nothing's changed basically. And so what we're going off of is the March 2020 lows on the triple Qs, which is tech. And then recently we created this bearish rising wedge right up in here and on the daily. And when we did that bearish rising wedge, we also put in negative divergence. So this was all divergent high price action, really starting about right here. Let me go ahead and circle that. The negative divergence showed up right about there. And it built for months and months on end, basically going all the way back to November of last year, and it just continued to diverge and continued to grind higher. That's how these negative divergences typically work. They kind of build, they continue to build until you get the breakdown. But they tell you that a breakdown is coming, that there's not much more up move left. And, you can see we've now had this breakdown in the Qs. So the sell signal was, the firm sell signal was right here on the 22nd. You got the gap down and the daily close below that pattern. That's your sell signal. We've since sold off a little more. Now we're in kind of, volatility starting to rise. And so you're going to see big moves in both directions. You're going to see, big drops and then kickback rallies, and then big drops and kickback rallies. That's how the downside works, is you'll move down and then the dip buyers step in and they'll buy the dip. Then you'll move down more. They'll buy the dip. Then you'll move down more, and then everybody panic sells, and you get a kind of a flush out move. That's kind of how it works. Now that can take time to play out, because especially this market has been a very buy the dip market. Every single little dip gets bought. So it makes sense that, the dip buyers are not going to just go away right off the bat. They have to really start to realize that they're going to take on losses buying the dip, and then they'll quit doing that. But for now, we're seeing a little bounce today in Qs. Nothing crazy, just a little kickback, a little bounce. Here's the hourly chart. You can see we're still, basically trending down. So you go down, you get little bounces. I don't see any technical change in the chart that tells me we are going to, bounce too much. Now, if you look at the hourly, one thing to point out though on the Qs is you do have bullish divergence right there on the hourly chart. See how we made a new lower low right down here, and it was a higher low in the momentum. So that's bullish divergence. And what does that mean? Well, that means usually you're going to get some sort of a bounce. Again, it's on the hourly. It's not on the more significant daily time frame. So the hourly tells me, okay, we're going to get a little bounce. And we've seen that as of today. I mean, the Qs is up 1%, almost 1.5%. But on the daily, I don't see any technical posture, any change in the technical posture. So daily takes, has heavier weighting than the hourly, obviously. And on the daily, there's no bullish divergence on the daily. There's just downward momentum and downward price action. So I think we're heading lower. Basically, maybe they'll probably close today in the area where we're at. Try to close on a positive note. But ultimately, I think we're still going lower. Probably next week. down to 300, or it's about 299, 290. It's right in this area basically. It's 297 to 300, somewhere right in there. And I think that's where we're heading. We'll likely get a more sustainable bounce down there. Probably bounce, off of that for, a more sustainable period of time. But I still think we got to go a little bit lower. And that's what the chart's telling me. I don't see any change in posture yet. Looking at the SPY, here's the hourly chart on the SPY, and we don't have that bullish divergence on the SPY. You'll see here lower lows in momentum, so just downward momentum, and we have downward price action. So that's one of the reasons why, we're getting a little rotation and bounce in tech, but we're seeing some weakness in oil and the financials. So I think, in general, there is, I don't see anything that tells me SPY's done selling off on the hourly, at least. On the daily, the daily has, I don't see anything on the daily either. So ultimately, a little bit of a bounce today, but I think we're heading lower. I've pointed out the levels where I think we're going, but it's very possible we head down to this 358, 360 area in the SPY. You can see there's 4 reactions along that trend line. 1, 2, 3, 4. So working our way down to there over time, I think is probable. And from where we're at now, that would be a drop of another 5 to 6% in the SPY. From the highs, that would be a total drop of about, depending on, of course, when we get there, 8%. So I think that's a very likely scenario. We could go lower from there, but for now, I would just, the higher probability is to get down to at least here, and we'll just have to measure the market when we get down there, or if we get down there, of course. IWM, so IWM undercut this trend line right here recently, and they're trying to recover that today. So yesterday you had the close right below the trend line, but it wasn't impulsive. Again, you want to see a nice break of trend line support for a sell signal. And yes, it broke and it closed below. Wasn't that impulsive though. It was still pretty close to that trend line. So today they gapped it, it opened lower and ramped right back up. So no breakdown in the small caps yet that I would consider a sell signal. However, if those large caps continue to sell off, which as of right now they look like they're going to, then small caps will probably get that breakdown. But nothing there yet. So until you see it, the trend is up. And bonds are catching a little bit of a bid today. So that's expected, if bonds if we're going to see lower prices, then you would expect people to rush to the dollar, to bonds, and to gold. And we'll cover gold here in a second. Bonds, the long bond catching a bid today. This blue line, so we undercut that yesterday, and I figured that would be the breakdown line. So this is really your longer term trend line. You can see coming up, we broke it just briefly back here in 2018. The Fed, recovered it, and you can see where we're at right now. Yesterday we just undercut that. That looked like a reversal candle when it, pretty impulsive. You could see yesterday that buying was pretty impulsive towards the lows. They stepped in and bought a lot of volume. Look at the volume right there. See that volume spike in the background, how much volume there was yesterday? So that, to me, looks like the ending down move. And today we're getting confirmation that was a reversal. So, again, looks pretty, looks like bonds are going to hold in this area, longer yield. So what does that mean for the markets? Is that, I think there's still some more repricing in the markets. I think the markets need to come down a little bit more. I'm not looking for a huge drop all at once. I am looking for lower prices in tech and the SPY. But if bonds are going to hold in this area and stabilize, the markets will reprice lower and then they'll stabilize. So something to kind of take note. And it's important to watch this yield here to see where we go. If the bonds continue to sell off and they drop lower, which they very well could, because we don't have bullish divergence or anything in this TLT. You can see just negative momentum negative price action. So if maybe we move higher a little bit, then we start to undercut the lows and put in that bullish divergence. That might be something, and then you'll see the market sell off more, and that might be the area that everything stabilizes at. This is not something I'm interested in buying this thing yet. Maybe if it starts to put in some bullish divergence on the daily, I might be interested, but just watching it. Okay, gold. Gold is getting smoked today, which is interesting. So let's see what we got going on. If I look at the RSI, we still have bullish divergence. It's barely there, but it is there. Any lower prices from here, and we're going to burn through that. But you can see right there, we made an equal low in the RSI on a new lower low in price. So you'd expect the buyers to step in here, and if they do, then we'll still have that bullish divergence. Here on the PPO, as I zoom in, you can see we still clearly have bullish divergence right there. Again, any lower prices, we're going to start to burn through these bullish divergences, and that's going to be pretty bearish. So we'll have to watch that. But again, what my style of trading is, I step in at areas of support or resistance close to the risk area. So if I'm wrong, I'm wrong small. And so as of right now, I still don't see signs that tell me that I'm wrong in gold, at least not as of today. But if we continue down from here in gold, then we're going to burn through the bullish divergence, and we're going to have just negative momentum and negative price action. But again, this is the area where the buyers should be at. So if we're looking for signs that they show up. Here's XLF. Financials are starting to break down. I've been kind of watching these to see if we're going to get a break. I think you got a short-term sell signal on financials. Here's the thing. You've got negative divergence. See it right there on the PPO. And this is an equal high right there. So let me zoom in just to make sure. Yep. So that's a negative divergence because you basically made an equal high in the RSI, but on a much higher price right up here than previously. So that is, previously you were here with a high of here in your RSI, then you made a new higher high in price and an equal high in momentum. So that's negative divergence. And then you look for a trend line break. So going to the hourly, this is kind of the shorter trend line on the hourly that's just been kind of walking up. And we broke. Started to break down. So I'm looking for more selling. I'm not going to trade this one likely because I've got several other positions in other stocks. So I've got a fair amount of short exposure, and I don't want to add to that right now. But if this is going to continue down, then I think we come back down to this trend line down here around 29.75. That trend line is really the bull market trend line going all the way back to 2011. You can see here's where we created the trend line, held support here, here, broke from underneath, hit resistance there, and then recently broke above, held support in that area, and off to the races. So if we're going to come back down, look for it to hit support, probably get a bounce around there. But that's the area that I think it's trending towards, at least in the short term. Apple. So again, the Apple's contributing to the bounce, and all the things are today. They're contributing to the bounce in the triple Qs, but nothing technically has changed on the daily chart. So if I go back there, you can see here's your trend line on the daily right there. Nice clean trend line. Negative divergence was building, and so you wait for a break of trendline support. There's your break right there, and we got a pretty impulsive move straight down in Apple, all the way down to 118.49 from that initial break. So from that sell signal, which really was right about there, that's a drop of about 11% in Apple. So it makes sense that we're gonna see a bounce, but the point is, you bounce, but we've broken the trend line support. I think we continue to trend down. I'm looking in Apple probably for a move down to this 102.68 as the next level of support. So we'll just kind of mark that out. From where we're at now, that's a drop of another 17% in Apple. And yeah, that's what I'm going to say. I think we head down there. And that's about as far as we'll go. But we'll look at it when we get down there, or if we get down there. Microsoft's still holding above this support line right here at 227.73. So until that breaks, it's this is an area of support. So if this is going to make another leg higher, Microsoft's going to continue to run higher. It shouldn't really break that level, and it hasn't yet. So something to take note of. Let's take a look at Etsy. So they reported earnings yesterday, and the market took it as positive. But all we did is back tested the broken trend line support. So you can see here, here's your trend line in Etsy on the daily chart right there. We're walking up that. Started to wedge out to create this bearish rising wedge right here at the top. And when we did that, we put in negative divergence right there. So then you're looking for a break of trend line support, and we broke right there. There's a nice clean sell signal and more follow through downside on the next day. So there's your sell signal. Then they report earnings, and it does a back test today. Ran all the way up here to 231, about 232, which is the top, the bottom of that broken trend line, and was rejected right there. So yeah, I think more downside from here. More downside obviously from the back test of the broken trend line, but we're already selling off. So I think there's more downside, and Etsy's going lower. Next level of support will be all the way down here at about 166.85. Okay, Peloton. I took this trade off. I'm trying to lighten a little bit of my short positions. Some of the ones that have been really profitable. Just trying to lighten up on some of those to reduce risk. That's all about managing trades. And when we got the sell signals this week, I was fully short, like completely short across the board, pretty heavily short. And so now it's time to lighten up a little bit and lock in profit. And I always lock in profit on winning trades. So again, I took this one off. Just gonna manage some of the other ones that I have. From the position entry, which was right up here, I entered right here, and really for right now, that's a 25% gain in a pretty short period of time. So pretty good gain. I do think it's probably going lower, but again, I need to manage my risk. So, if you're in this, I do believe it's going lower, but I could see a bounce. Again, we could get a bounce maybe up to this 137.50 area. That would make sense. Get rejected there. I think we're ultimately heading down to about $100. Maybe I'll add this one back short if we get that bounce. Otherwise, I'll just let it run. Okay, the other one that I took off is this Qualcomm trade. Again, I got short right up here on this. I have it circled right there. This was a nice clean uptrend right there. And we had negative divergence continuing to build. And then we got the sell signal right there. We broke, did a back test, and then it failed. So, really from that back test, this thing dropped about 16% in just a matter of a few days, really, or a couple weeks, I guess. Pretty good gain. The problem that I have with this one is, one, people love this stock because it's tied to Apple, so it's kind of an institutional stock. The other thing that I like, or that I don't like, is there's this big gap right here. This big, obvious, easy to spot gap, and it's just so obvious that when it gets down in this area close to the gap, people are going to step in and cover if they're short. People are going to start buying early. So because the gap is so obvious, I think that, and people will likely front run it, I don't know if we'll get down to that gap. And so that's why I kept saying, okay, likely to, you likely want to cover. We're probably going to get close to the gap but not actually fill. And you can see we're about halfway through we're close, but we're kind of struggling in the area. So because I'm profitable on it, and because that's kind of what I think on this one, that this gap is going to be tough to struggle with, I just go ahead and cover this trade and take my profit. And that helps mitigate risk on some of the other trades that I have on. Here's Zillow. All right, so my trend line's right here. This is the trend line. Now, we broke once and we had that bear trap, and then it ramped higher, and we've now broken back below. What you could do if you wanted to give it the benefit of the doubt is just adjust your trend line to something like that, and then wait for a break of that trend line to trigger the next sell signal. I'm already short in this one, so I'm kind of going off this trend line. Still looks good to the downside. I think it's like, we're getting a little bit of a bounce today. And again, this thing, when it bounces 4%, because when it falls 10%. So it's a big mover. So adjust your position size accordingly. And I do believe we've got some more downside. I think Zillow's heading down to this level right here at 133.35, and we're likely going to get a reaction or a bounce down there. So from where we're at now down to there is another 20%. And yeah, I think that's the area of more major support where we're likely going to get a bounce. Okay, so NIO and Tesla, the two EV stocks are down today. They're kind of showing relative weakness because a lot of these high-flying kind of tech growth names are up, and yet these two, which are, they are high-flying tech growth names too, they're down. So, that just tells me that there's more downside in NIO. And that's why you've got the trend line right here on the daily. We've been walking up that trend line. When we started to do that, we put in negative divergence. The negative divergence started to show up right here. And so all of this price action was divergent high price action, basically. So that tells you a trend, that the trend is likely going to change. So you wait for a break of trend line support, which is right here. There's your trend line. There's your break of trend line support. We got the close, then the gap down, and a little kickback rally, but we're seeing the continuation of the trend, which is down. The trend was up right here. That's why you have the trend line, but that trend is broken, and now the trend is down. So NIO likely heading down to $40. I think a lot lower though on this one. I think we'll break 40 and go down to probably about 22.19. That to me, or in the area, they'll probably step in a little early. There's a gap right here, so they'll probably make it get close and then not fill the gap. But in that area, anywhere from about $24 down to 20, we're likely going to see some support down there. But that's quite a ways down from where we're at now. That's a move of about 50%. So that's what I'm looking for on NIO. Tesla, same thing. We've got, it's kind of trying to hold this support area right there at about 657. So a break of that is, the next sell signal basically. And we break that, I think we're heading down to what looks like this trend line right here. We've got this upward sloping trend line, and it falls at about 540 right now. So we break that. I think we head straight down to that trend line, and we're likely going to get a bounce at that trend line down at 540. But from the highs, if you look, from the highs, and really from when we got the sell signal, that is going to be a drop of about 36%. So that's a pretty good size drop in Tesla. So watch for that price action. And just one thing before I kind of wrap, the reason why I think we're going lower, you look at the momentum indicators, there's no bullish divergence, all right? There's just downward momentum. I can't make a bullish divergence really anywhere. Here's the PPO. You can see right there, we made a new lower low. So we have downward price action, downward momentum, until you start to see signs that a trend reversal is likely, such as bullish divergence, breaks of trend line resistance, things like that. Then you just go with the trend, which is down, all right, and on this one. So, okay, so these gold miners are getting smoked today, but we're still at the area where the buyer should step in, is basically what I'm trying to say. If I look at GDXJ, you can see here, new lower low today, but it's a divergent low right there in the RSI. See how we still have bullish momentum. See how it's trending up or sloping up? Now, if we take that out, that changes the picture. But as of right now, it's there. And you see the PPO, I got to adjust it a little bit, but still bullish. It still has a bullish divergence. So that's telling me that this divergent low that we got today in price is likely going to reverse, and this is where the buyers should be stepping in and buying. So, what I would do is probably just wait for that reversal, wait for that snapback, and see it kind of hold. give it a day or two, let it hold, and then that would probably give you a good sign that, okay, that was the low and now we're going to make a new high. Because if this is the low or near the low, because we can continue to diverge, then this is setting us up for another good sized leg higher in gold. Possibly like GDXJ could be, I already got the line, could be as a rally this big. And that would be a rally of maybe 150% or so. That might be what's in store for gold on the next leg higher. So that's kind of what I see on that. That's just GDX. In gold, not all the miners have bullish divergence. So some of them do, some of them don't. It's kind of a mixed bag. Like here's one, Agnico Eagle, the divergence is still there. Here's the you can see the RSI, bullish divergence still there. Now it's pointed down, so you want to start to see the buyer step in here and turn this RSI back up. So you got to watch for that. And then the PPO, you can see still bullish, although it's pointed down. So again, the buyers need to step in to confirm some of these divergences on these miners. Some of the miners don't have bullish divergence, so maybe there's slightly lower prices. You don't always have to have bullish divergence showing up, but again, it's nice to see. It helps with support lines, and it helps build a case. And so again, here's AEM. It's below my buy point right here, this was my buy zone. So I was building a position here. We're down below that, so I'm not adding to the position now. Now I'm just waiting for the buyers to step in, or looking for opportunities to exit if the buyers aren't going to step in. So if we continue to go lower, then I start to exit. And again, you buy here. If you're wrong, you lose small because you're close to the support areas. I think the buyers are going to step in, but again, that's just a guess. We'll have to wait for the price action. Copper's starting to break on the commodities. So, I am seeing a little bit of an unwinding of this inflation trade that's been going on, where everybody's been buying commodities and just inflation hedges. I'm seeing a little bit of an unwind of that. Copper, is an obvious inflation trade, and that's the thing, is if we're going to have economic growth and economic inflation, copper should continue higher. So we're seeing copper pull back pretty strong actually in the last 2 days, but it had gone pretty much parabolic. So could be topping out in here in copper, heading down to probably 21.80. And again, that's all deflationary stuff. So that kind of also goes with the case that we're going to have selling in the markets. I do think inflation is probably coming, but I just think it's likely we're going to get some deflation first in terms of markets just unwinding. They've been ramped up, so to see that kind of unwind and sell off, and then what I'm expecting is to see that start to build, and then we'll wait for the powers that be to step in again. They've proven that they step in after every time basically, so it's likely they're going to step in again with more QE and whatever they decide to come up with, and then the inflation trade will likely be back on. So that's kind of how I'm playing it. And the gold and gold miners have already sold off pretty substantially, so they kind of maybe front run that move, and now the markets are going to start to sell off. So it doesn't mean that gold and gold miners are heading lower, even if the markets are going to sell off. They might have already made that move, and now they're going to kind of base out, getting ready for that next leg of inflation trade to come on. But the markets haven't sold off enough. From my perspective, I don't think we've had a big enough pullback to trigger the Fed or anybody else. So, just to flip back to the SPY, and if you want to look at just the bigger picture, just to wrap up the video, the Fed steps in when you get big pullbacks. So right now, the Fed stepped in right here on the SPY back when we broke trendline support, and this is our bull market trend line right here. And I'm actually starting to see some other channels hone in on this trend line as well. I've just started to see it. I've seen a lot of people, what they've been doing is they're kind of taking it from back here, and they're starting here, and they're doing this thing, or they're starting it from like here, and they're just doing this thing like, oh, this is how it is, and this was the COVID drop, and we've recovered the trend line. Okay, but that's just kind of cherry picking, you're just picking the data point here that makes sense. But my data comes all the way off of the 2009 lows. So this is the end of the Great Recession. And then as you come up on the weekly chart, you can see all the areas that we held support back here. We held it here, 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 all through here. And then when we broke, and it's just further confirmation that when we broke, we've been tagging that as resistance. So here's your break in 2018. This is when the Fed stepped in after a 20% pullback. And then we back tested all the way to resistance, failed with the COVID drop, but that was technically induced. Yes, the headline, COVID being the pandemic might have caused a bigger drop than what would have, but this thing was going down there regardless because it was right there at key resistance. We failed, broke in, Fed stepped in again, ramped it all the way back up as I zoom in to key resistance, and we're starting to reject here. So again, whether we kind of muddle around here for a little bit, I still think we're heading lower. And don't expect the Fed to step in up here. The Fed's not going to step in up here. When the markets start to really sell off, 20%, that's when the Fed will start stepping in, but likely not before. Okay, that's all I got. And I'll leave me a thumbs up if you guys find value. I'll catch you guys on the next one.